SOFI update here on the solar eclipse Monday, the 8th. So nice move today, 5%. I'm going to start here on the daily time frame. Again, this video is straight technicals. There's no fundamental analysis. I don't really even go over the news or anything like that. It's just all technicals. So starting here on the daily, we're going to go over the moving averages first. So right now we are above the 20. We started below that on Friday. Nice move today, 5%. Our next resistance is sitting here at the 50 DMA at 785. Above that, you're looking at 823 in the 200 DMA. Right now, these moving averages are very bearish. We have the 20 below the 50, 50 below the 200. So really, we just need to get price above the 200, and then we need to flip these moving averages, and then we can really take off. But until we get above these moving averages, it's going to be tough. But again, the structure of it looks pretty good. Today we broke above 772, which invalidates this being a second wave and a move down. So that's good. We completely invalidate the extension of the fifth wave. So that would be like this. We invalidate that if we get above 795. So this looks great. We just need to break above 785 here soon. I'll zoom in here a little bit farther, and you can see everything looks good. We can draw a parallel line though from the top here, and you can see we hit basically the top of this. So I want to see it break above this parallel line and hopefully get above 795 and 785, and then we can start thinking about this being an actual third wave here. And my target would be the 200 DMA at 821. So this looks like the most likely scenario. We do need follow through tomorrow. It needs to keep on going. If they want to be really tricky, they could do something like this, which would be pretty annoying. We didn't quite fill this gap on Friday, but it looks to me like this is an impulse move right here on smaller time frames. So we should be heading up here for a third wave to 821, especially with earnings here in a few weeks. So if you didn't watch the video last time, basically this is a third wave of a third wave. So we have 1, 2, I'm looking for 3 up here to this box, pull back, and then projections would say 950 to 10 bucks. This wave right here would look like that. So I want to get outside this parallel line by Wednesday. Maybe Wednesday afternoon, make it up here to 820. And if that happens, we might reject the 200 DMA, pull back, and then go through it into earnings, or slightly, maybe into Opex. What would be really bullish is if we hit this into Opex, and then we started fading into earnings. Because earnings are going to be the wild card. We have no idea how bullish this can be after earnings. We could be at 830 going into earnings, bounce out of here, or pull back, I mean, and then we could have a $4 move after earnings or something crazy if they have really good earnings and shorts cover. You just never know. I'll show you back here. If we go back here to June of last year, we were at 446. I'm pretty sure this is after earnings too. And then all of a sudden we just took off, and within a month we went up over 100%. So again, these are projections. I don't know how earnings are going to react with this, but the two bullish possibilities are, again, A, B right here, C down, and that would complete overall B wave or second wave, or this was a first wave, second wave, and we're in third wave of a third wave. If that's the case, earnings would probably take us all the way up here to 14 bucks, because that's the 1.61 fib of this right here. So we might have some kind of small movement up here, pull back, and then earnings makes us go way higher. So which one would I lean towards? It's really hard for me to go against the standard deviations, but and that's why I say you need to have a swing position that you can unload at the top of the range and then still keep a position for long term, obviously. But you need to be not missing opportunities in this stock. Otherwise, you're going to be waiting for 3 or 4 months for it to do another downtrend. So the top of 2 standard deviations takes you to $9.50 or $10. You can see here, bottom of the standard deviation, top of the standard deviation. I don't have it going back to here. This was actually slightly outside of standard deviation. Like this went to 3 standard deviations. So it can happen, but it's probably going to be like an earnings spike that's going to do that. I don't think the actual intraday movement will go that much higher than this daily standard deviations. So that's pretty much the layout right now. We just need to get above get these out of the way. We need to get above 785, which is the 50 DMA, and then we can make our way to the 200 DMA here at 820. This is the next resistance right here, 785. So that'll be important to get above that probably tomorrow, and then we can head here by Wednesday. So we'll see what happens. That's really not that far away either. That's only 45 cents more to get to 820. So we are on our way. It looks good. And hopefully it keeps on playing out. Hopefully they don't try to do anything crazy and pull it back anymore, or we get a market correction or something like that. I think the market should be good into Opex. So I think that this move looks good for probably all the way up here to 950. But we'll see. Anyway, that's it for this video. If you like the content, subscribe, like the video, leave me a comment, tell me what you think. And I'll keep you updated here maybe tomorrow or maybe later in the week.